What is an asset-based loan? I get this question all the time. That's exactly what we're going to talk about today because you can use assets when you're looking for bank financing, when you're looking to get a loan. You can use assets like real estate. You can use assets like receivables, heavy equipment. So there's a lot of different options for you as a startup business, as an established business, and that's exactly what we're going to talk about today. What's an asset-based loan? Do you have assets that will qualify? And what are the next steps? And what are the best funders that are actually going to work for your individual business? I'm Dominique. I'm a business funding specialist, CEO, and host of The Domino Effect, this channel right here for entrepreneurs and small businesses. We specialize in helping women, veterans, and we are truly trying to create impact. So if you find the information on this channel helpful, then go ahead and hit that like button, that subscribe button. We've helped secure over 5 million in capital, and we want to keep that number growing. So, all right, guys, let's get into it. So there are many different options when it comes to the type of assets, or even if you don't have assets, the type of different lending products that are out there. But it can get super confusing because there are so many options, right? Especially as alternative finances surpass traditional bank financing. Most businesses can't get funded at the bank, right? But that's exactly why you're here on this channel, because we want to help you understand exactly what those options are and how you can use it to your benefit, right? So assets, they can be looked at in a lot of different ways, guys. And banks look at these, non-bank lenders look at these, and they both have different requirements that they go by. So some of the first assets that you probably know about are going to be real estate, right? Commercial real estate, it's really good. Residential real estate, if we're talking about SBA financing, okay? And then you have things like heavy equipment, all right? We have machinery as well. So if you're in the construction space, manufacturing space, if you're in healthcare, medical supplies, we were working with a company that actually built these really cool laser removal, like fat laser removal, right? But it was a machine that did it for you. And so they were taking the machine and licensing it out. So very, very, very cool, or franchising it out. So very, 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 very cool ways to do this, right? And then another way or another option for assets that a lot of businesses don't really know about is your receivables. So if you're invoicing your clients, right? Let's say you're in healthcare and you're invoicing like your medical clients, or you have a construction project and you're invoicing the state or something like that, right? Then you have to wait to get paid, right? And what does that do? That creates a cash flow gap. So receivables, you could do something like factoring. That really helps, and you can get a line of credit against your receivables. But these are a lot of different options. But fourth thing that you can do is you can use your inventory for leverage. So if you have products that you're selling online, whether that be e-commerce in the beauty industry, whatever that is, you can use those for leverage. So I'm going to go into all of them a little bit more. First one we're going to go into is real estate, okay? You can go to any traditional bank, and if you have commercial real estate, it's a really strong asset. It's a really good thing for you, okay? So the only reason that this might be an issue is if your financials are messed up, right? Which is pretty common, unfortunately. But if you're going, you can fix this, right? And that's one of the things that we do here on our platform, on our funding platform, is help mitigate some of those risks. But you could also be going through a really tough time, right? A lot of people went through COVID. A lot of people are still, struggling from having to pull out of their personal savings and things. And it can be really tough, right? But there are some private non-bank lenders out there that are really going to focus on the collateral of the real estate. They can get really comfortable with it if you are, some of these other areas aren't on point, right? The financials, when I say about the financials being messed up, maybe you're commingling your funds. What if you've got a really solid partner, right? Or you've got a really solid exit plan? If you can show that you can repay it along with that collateral, then you've got a really good, strong chance of getting funded on the alternative side. So if I'm going to borrow money, right, and I'm going to do this and then be able to pay it back in 12 months, right, which is usually the time, if we're talking about a short-term loan, 12 months, 24 months, 36 months. But no matter what lender you're talking to, they want to understand that whatever endeavor you have going on, there's an opportunity there for them as well. So make sure that you are able to show them that. If you're purchasing this equipment, what's it going to allow you to do, okay? Getting that line of credit or a term loan might not necessarily be a good fit if you're going to get equipment. Okay. So you want to be working with an equipment lender in that instance because you can get probably a lower interest rate on that as well. But you can use a line of credit, right, on other products to grow and scale. Now we're going to talk about equipment, and equipment is like yellow iron manufacturing. It could be vehicles, large equipment, right, guys? So there's lenders out there that can refinance the equipment for you. It can be hard to do, but you want to think about something, right? Now, what you think that the value is worth is not necessarily the same as what the lender is going to think the value is worth. They are going to look at a few different things, right? They'll look at the liquidation value. So you'll probably get 50 to 70% of on the dollar of what they would sell for it on the market. So if you've got like $1 million worth of equipment, they might value that as 7 to 800,000, and you would get maybe 50 to 70% of that. That is how lenders operate. Let's say you're selling on Amazon, you're selling on Walmart. Maybe you have a Shopify store, or you're selling on TikTok, maybe even GoDaddy, wherever that land is. There are standalone lenders that will lend to you based off of that. You can pull cash out against your inventory, you can get a line of credit, and then you can use that to grow your business. So outside of the receivables, they're considered assets and you can leverage them. You can get a revolving line of credit and boom, you're growing. Now, there are lots of benefits to getting these asset-backed financing deals. They're usually coming with high quality assets, so it's easier to get a pretty favorable loan. You have assets, you have B2B receivables, you have inventory, even if you have real estate. There's a lot of ABL, which are asset-based lenders, that are going to give you pretty favorable terms and closest to bank-like terms, especially now in today's market. And usually lenders, it's much easier to work with a non-bank lender. It takes less time. They're not as restricted and they can work much quicker, okay, much easier. There's not so much red tape. They're seeing more entrepreneurial businesses. They see you growing. They want to be a part of your growth, okay? It's not like they don't want to be a part of your growth. But if you have high quality stuff, high quality assets, putting in the bank, see what you bring to the table is part of the process. More importantly, as you grow and scale, you've built these relationships with these lenders, and you can get back to build your business to a point where you can qualify for bank financing. You can qualify for the SBA financing. So it's not all super easy. There are a lot of things that you need to watch out for, especially because there are predatory lenders. People find themselves in situations where they're like, I need money now. I need to apply. May I make a suggestion and hold off on that? Schedule your funding planning session and figure out exactly where you're at. Go to plan.dominofxgroup.com and you can get that scheduled. But this is what you want to watch out for. Make sure that when you're reading your terms and your paperwork, that you're reading all of the rules, you're reading all of the guidelines and everything that's involved with borrowing this money. You don't want to be surprised with anything. You may have to keep a certain amount of cash in your business. You may have to give them access. There may be a certain process where you have to go through like a lockbox. And then there may be another process where they have to verify your vendors. So there can be different rules. So make sure that if you're reading through it, you're just protecting yourself. It might be a situation where the bank says that you need to have a certain amount of profitability, and maybe you're not at that point, or you're not sure if you can stay at that point, or maybe you're going to have to supply your financials monthly, quarterly, whatever that looks like, and you just can't see that happening within all of the other stuff that you have going on. It could end up putting you in a really tough and vulnerable position, guys, and that's exactly what we don't want. So there's a lot of non-bank alternative lenders out there that step in and fill this need, especially for women, especially for veterans. And then you don't necessarily need collateral with a lot of these non-bank lenders. Does collateral help? Yes, but you don't necessarily need it. We have deals where people don't even want to use their assets. They just want to use the cash flow. They need it for some type of a bridge, right? So it depends on what you're looking for. If you're looking for SBA financing, then absolutely you're going to need some type of collateral. It helps, but if you're going to be looking at like a micro loan or something like that, you could really get by with having really strong personal credit and a business plan. But if you want to explore an asset-based loan and an asset-based product, then see if it just makes sense for you. It might not make sense for you to give up the collateral, especially if it's your home, right? That's probably something that you don't want to tie into, okay? So you might want to keep that separate and just out of the mix. But also keep in mind when you're dealing with things like real estate, you might have to do things like appraisals, closing costs, titles, inspections, a lot of things where it might just make sense to move faster and not use an asset-based lender. All right, so let's recap. If you want to put up these assets, if you have real estate, if you have equipment, if you have inventory, if you have B2Bs, if you have some of these assets and you are in a position where you're like, this makes sense for me, If something goes wrong, just keep in mind that the lender does have access to, take those assets. So they have a right to recoup that if you can't pay. So make sure that you're staying on top of it, right? It is a loan. So to recap, there's so many asset-based lending products out there, you guys. You can use your receivables, your B2B, your real estate, your machinery. If you do put up an asset, you're usually going to get better terms, right? But make sure that you want to go through all of your paperwork. A huge downfall is not reading through the fine print. All right, guys, that's it for today. If you found value in this training, then go ahead, hit that like button, that subscribe button. Guys, the rates are changing, especially in this environment that we're in today. The guidelines are constantly changing. Collateral type lenders are changing. Lenders are changing what they're accepting now, especially after all of the PPP and EIDL incidents with the fraud. They're not even working with certain NAICS codes, guys. Even consulting for certain banks, they don't even want to work with it, okay? So that is constantly changing, and you want to be ahead of the game. And how do you stay ahead of the game? Well, you got to be prepared and strategize. So make sure that you're scheduling your funding planning session. You can text your questions to 888-488-4145. Do me a favor. I have a survey that I need you guys to complete. If you're a business owner, it's really important that you know that your voice matters. So go ahead and hit that link in the description and let's hear from you. All right, guys, that's it for today. Hit that subscribe button so I can continue to make more free courses and trainings just like this one.